Houston, Texas is considered one of the best places to invest in the United States. As a matter of fact, Financial Times in their 2024 report has named Houston as the #1 city to buy your investment property. Also, as a real estate investor and a real estate agent myself, most of my properties or all of my properties are actually in Houston, Texas. I do own a couple of single family and multi-family. And why is Houston the best place to invest? Or why should I even consider Houston? So in this video, I walk you through my top 9 factors you should actually consider before you choose any market. If you don't get this 9 factor right, you might just be wasting your time. Number 1 on my list is, what is your investment strategy? What kind of strategy do you want to implement? Do you want to be a landlord, or you want to be a fix and flip, or you want to invest in a syndication, or you want to be a private money lenders? Among other things that you can do within real estate, but you have to clearly define, this is my strategy. Number 2 on my list is the property type. Are you going to be buying a single family, or are you buying a multi-family, or are you buying a self-storage, mobile home parks, big multi-family? You have to clearly define what kind of property do you want to go for. It's always advisable, if you're new to the game, you should start as small as possible. Maybe buy a single family first and see how that goes. From there, you can move on to multi-family or any other kind of asset class that you find interesting. Number 3 is your passion and interest. What are you passionate about? What do you really like to do? What do you have interest in? If you like hospitality, you might want to do a short-term rental. If you like to help people and build a relationship with people, you might want to go long-term route. If you don't like talking to people, you might just lend your money out to people that will need the money to do a deal. So these are the things that you should know. What is your passion? What are you passionate about? What do you like to do? Because research has shown that when people actually do what they enjoy, they tend to succeed, because there will always be some difficult time, but what keeps you going is your motivation, your passion, that interest of yours is what keeps you going during the tough time. Number 4 on my list, which is one of the most important one, is your risk tolerance. You have to clearly define, what is your risk tolerance? How much is too much? What is it that you would take? You have to understand your threshold. I call it a risk threshold. So is it 10 out of 10? Are you a risk taker, or I'm just about 2 out of 10? So you have to know where you fall on that, on that range, and that will definitely guide your kind of, property you should pursue, the kind of endeavor, the kind of market you should invest in. Number 5 is cash flow or appreciation, or you're looking for both. What are you investing for? What is your goal? Do you care about cash flow? That is, after you pay all your mortgage, your expenses, your property management, whatever is left is what we call cash flow. Or you care more about appreciation, or you're looking for a blend of both. You have to also understand, hey, what is my goal? And if that's my goal, what part of Houston market or Houston neighborhood, Houston city supports this kind of my goal to help me achieve that? Now, you might consider the likes of KD and Cypress. They have both the appreciation and the cash flow. And if you want to talk more about that, I would say reach out to me. I should be able to help you. Number 6 on my list is the available capital. You see, most of the time I talk to new investors, they only have $30,000 in their bank account and they want to go buy a 10-unit apartment complex. So I always tell them that this is unrealistic expectation. You should start from where you can start from. With $30,000, you're probably going to end up buying a single family, or maybe invest that in education, because you don't have enough money. But if you're talking about, hey, I have $700,000 in my bank account, now we can talk about, buying some multi-family. But if you have 20% down payment of a $200,000 house, then go for single family, make your life easier, start somewhere, gather the momentum, and you can go from there. Number 7 on my list is, are you going to be investing actively, or you want to invest passively? You see, investing active means you are, in the trenches. You are doing the deal day long. You're managing the, every aspect of the business. Either you're managing by yourself, or you are leveraging on other people, like a VA or like a teammate, and or something like that, or partnership. But it means you are very, very involved in the business. Passive means you're taking a back seat. You're only allowing your money to work for you. Now, people always get this confused. Some people want to get the return that somebody that is putting an active work into it are getting, but you are only investing your time passively. Unfortunately, it doesn't work that way, because real estate can be passive if that's the route you want, but it can also be very active if that's the route you want to take. And this is why it boils down to know how much time do you have for real estate. You have to clearly understand that. Number 8 is your strength and your weakness. You see, we all have to lean towards whatever works for us. If you know your weakness, that I'm not just very good at managing people, I'm not just very good at analyzing property, I don't like taking risk, then go look for real estate investing that that meets that your weakness. Or if you know that, hey, I'm a go-getter, I can do this, I don't mind talking to people, I can manage contractor, I don't mind, doing the work, all those things, then you might want to lean towards the active investing, because definitely you make more money doing that, but it also expose you to some risk, because the higher the risk, the higher the potential reward, and the higher the reward as well, the higher the potential risk that may happen. And that takes me to the last one, which a lot of people always get wrong, which is available time for real estate. I kind of mentioned this a little bit in my number 7. You do need to understand how much time do I have for real estate. Real estate can be passive, like I said, that is, you put a little bit effort and you're getting your return, and it can also be active as well, that is, I am doing the day-to-day running of the business to make sure that it is a profitable endeavor. But where people always get it wrong is that they don't want to put in the time, but they want the results, they want the reward that somebody that is putting all the time is getting. Again, it doesn't work that way. That would be unfair to those that are putting in a lot of hours, but you are only putting maybe 1 hour in a week, and somebody is putting 40 hours or to 60 hours in a week, and you want to get the same results with them. Unfortunately, that will not be fair to them. So these are the 9 factors you should consider before you choose any market. For me, I'm based in the Houston, Texas area. Most of my property that I own are in the Houston area. I've helped a lot of people, I think about 200 of them, to take action in real estate. Majority of them are landlords, because that's what I am as well, in the Houston area. And these are all the things I've seen, having worked with over 200 people, of course, and having owned a couple of property myself. These are things that I've seen firsthand. Like, I wish people can actually understand this. It will make their life easier. So, and that's why I made this video. I hope this is very helpful for you. If you find this video helpful, do me a favor, like this video, subscribe to this channel, make sure that you share with somebody that you think it can help as well. And above all, comment below, let me know what you think. Is there anything that I've missed out? Is there anything that you struggle with at the beginning of your investing journey? Or is there any topic you would like me to cover in the video? And I will be glad to reply to your comment in the section below. Again, I'm Wale Lawal. I'm very reachable. My contact information is in the description below. So don't be shy, don't be afraid. Reach out for help, and I would love to help you. See you on the next one.